Good morning and welcome to your daily solo 401k webinar Q&A session with my solo 401k financial, where we try to help you stop overpaying taxes and start building real retirement wealth. So this is your chance to get answers. Go ahead and use the chat, type over the questions. They can be surrounding any aspect about solo 401k plans or even IRAs. So today's topic is, can a Schedule C do a solo 401k plan? So we're going to unpack this. We go live at least a couple times a day. Today we'll be going live again in a few hours. So again, go ahead and type over your questions and we'll pause and answer those questions as they come in. So yes, a Schedule C filer can absolutely open and fund a solo 401k plan as long as certain IRS requirements are met. In fact, many independent contractors, freelancers, consultants, and sole proprietors use a solo 401k as their primary retirement plan because of its high contribution limits and flexibility. We find that many clients of my solo 401k financial will even pair that solo 401k plan with a cash balance or defined benefit plan so that they can contribute to both a defined benefit plan and a solo 401k plan for that matter. So that's something to be aware of as well. We'll have to do a webinar on that topic sometime in the future. So let's talk about who files a Schedule C. So a Schedule C is used to report earned income from self-employment activity. That's different than a Schedule E. We oftentimes get the question from prospective clients asking if they can open a solo 401k plan where they file a Schedule E. Unfortunately, the answer is no, because a Schedule E is not used to report self-employment activity where you're performing material services. Schedule E is commonly used in the concept of investing in real estate, for example. So that's an investment. So don't confuse a Schedule E versus a Schedule C, where a Schedule C, it's used to report actual earned income from your self-employment activity where you are doing the work, that is performing material services, to use IRS terminology. So who typically files a Schedule C? Uh, Independent contractors is the most common group that files a Schedule C, where they are 1099 NEC contractors, whether they're IT consultants or any type of consultant for that matter. So freelancers, consultants, of course, sole proprietors, single member LLCs taxed as a sole proprietorship, and even multi-member LLCs taxed as a sole proprietorship, where you have both spouses that work under the same LLC that happens to be taxed as a sole proprietorship. Therefore, each spouse files a separate Schedule C under that LLC tax as a sole proprietorship. So if your business income is reported on Schedule C, which is an attachment to your Form 1040, you are considered self-employed for solo 401k purposes. Let's keep going here. So Schedule C, line 31, is something you probably hear quite a bit when you're talking to your CPA or your tax advisor and you are a consultant. So Schedule C, line 31, is always going to be the starting point. So For solo 401k contributions, the IRS is going to review your Schedule C, line 31, the net profit, to determine if you had any earned income from self-employment activity to A, qualify for a solo 401k plan, and B, to qualify for the contribution amount. So line 31 represents your earned income from self-employment activity. So this is the starting figure for all solo 401k contribution types. That's employee contributions, also known as deferrals, employer contributions, also known as profit sharing contributions, and as well as voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth strategy. So your allowable solo 401k annual contribution is going to be based on this net profit figure after accounting for self-employment tax adjustments. Give me a moment here. Let's take a look at the next slide here, and then we'll take a look at some questions. Go ahead and type over your questions. They don't have to be specific to today's topic, as I mentioned earlier. They can be regarding any aspect of our solo 401k plans and even IRAs. So, who qualifies for a solo 401k? So, independent contractors and sole proprietors are fully eligible to open a solo 401k plan as long as they meet the employee requirement. So, employee rules to know is you can open a solo 401k if you do not have any full-time W-2 employees in your business who work 1,000 hours or more per year. Of course, your spouse qualifies regardless if he or she works 1,000 hours or less. So a solo 401k is for business owners and their spouses. You can always exclude independent contractors in your business. They do not count as employees. Of course, you're an independent contractor, you would qualify, but if you hire independent contractors in your business, let's say it's an LLC taxed as a sole proprietorship, you can always exclude contractors. You can also exclude anyone who's under age 21, regardless if they are a full-time W-2 employee who work 1,000 hours or more or less. So you can always exclude those under age 21. So as long as you meet the rules, then you and your spouse would qualify for the solo 401k plan. What about an LLC tax as a sole proprietorship? I think we covered this already. So yes, whether it's a single member LLC tax as a sole proprietorship, which is treated the same as a Schedule C filer for solo 401k purposes, or a multi-member LLC where you have both spouses working under the same LLC and they each file a separate Schedule C, then they would qualify. This means that the solo 401k plan would be sponsored by the self-employed business, in this case, the limited liability company, the LLC, and each spouse's contribution to the plan would be calculated using their respective Schedule C, line 31. In short, the business structure does not prevent eligibility as the actual underlying activity. That is, you have to be doing the work. You have to be performing material services to qualify for the solo 401k. So again, the key factor is how the LLC is taxed, not the LLC itself. So if we're talking about a wife and husband business, that means it's going to be just one solo 401k plan. Because again, the solo 401k plan is sponsored by that LLC. So they both work for the same business. So that means that the LLC is taxed as a sole proprietorship. This also works if it's an LLC taxed as a partnership or an LLC taxed as an S corporation. Today, we're honing in on a Schedule C sole proprietorship. So each spouse would report their own earned income from self-employment, I should say, on a separate Schedule C. So two separate Schedule Cs would be filed. So each spouse's solo 401k contributions are going to be based only on their own Schedule C income. So with the solo 401k plan, you are required to have separate holding accounts, aka participant accounts, under the solo 401k plan. So you need to have a separate bank or brokerage accounts, which are the solo 401k holding accounts, to hold each source of funds. That's the pre-tax funds, the Roth funds, and the voluntary after-tax solo 401k funds. And if you have both spouses participating in the same solo 401k plan, because they are both self-employed under the same business, then this structure allows both spouses to fully participate while maintaining proper compliance and record keeping. So here's an example of a one participant plan, for example. So let's say you file a Schedule C. So your business, your solo 401k plan can be sponsored under your name if you're a contractor and you just have a sole proprietorship, or if you're an LLC taxed as a sole proprietorship, it would be sponsored by the LLC. So one solo 401k plan for a one participant, that's you as the contractor. We would help you to open up three separate holding accounts. It is not considered three separate solo 401k plans. It's one solo 401k plan that allows for these various contribution types. Here at my solo 401k financial, we offer a very robust self-directed solo 401k plan that allows for pre-tax contributions, whether employer pre-tax or employee pre-tax solo 401k contributions. So they would all flow into the one brokerage account or bank account under the plan labeled pre-tax. Our plan also allows for employee Roth solo 401k contributions, as well as employer Roth solo 401k contributions. Those would get deposited to that separate brokerage account under the same solo 401k plan that's labeled Roth, because you are required to separately track each source of funds. And the third holding account is the voluntary after-tax solo 401k bank or brokerage account for the solo 401k. And that's where you would make voluntary after-tax solo 401k contributions as part of the Mega Backdoor Roth solo 401k strategy. Once you make that voluntary after-tax solo 401k contribution, those funds get converted to the Roth solo 401k. And then once they get converted to the Roth solo 401k, a Form 1099-R gets issued to report that Mega Backdoor Roth conversion to the IRS. Here at my solo 401k financial, our plan does offer the Mega Backdoor Roth strategy. We'll also perform the Form 1099-R reporting for the Mega Backdoor Roth solo 401k strategy for clients who timely request it at no additional charge. We file a copy with the IRS of that Form 1099-R. It gets filed with the government by March 31st each year electronically. And then we also provide a downloadable copy to the client. So here's an example of a two participant plan. Let's say both spouses are self-employed under the same business. Let's say that business is an LLC taxed as a sole proprietorship. So it's still considered one solo 401k plan, but the LLC would sponsor the solo 401k plan because the solo 401k is a defined contribution plan. It requires separate holding accounts for each participant, in this scenario, each spouse, as well as separate holding accounts for each source of funds. Hence why in this illustration here, you see 6 separate bank or brokerage accounts, holding accounts under the solo 401k plan, because you have 2 spouses participating in the same plan, and therefore each spouse needs a separate holding account for each source of funds, that is pre-tax, Roth, and voluntary after-tax. So it's not considered 6 solo 401k plans. It's one solo 401k plan, one employer identification number for the solo 401k. You cannot use the EIN for the business. A solo 401k is a retirement trust requiring its own separate employer identification number, where the IRS will issue a letter in the name of the solo 401k plan, listing the EIN number for the solo 401k plan. And that same EIN number is going to be reflected in each of these respective brokerage accounts. So one plan, one employer identification number. You do not use your business EIN. That EIN number for the solo 401k plan is very important. It's used for reporting purposes at the brokerage firm or banking firm, as well as for Form 1099-R reporting when you process a mega backdoor Roth solo 401k conversion or pre-tax solo 401k conversion or a distribution. You use the EIN number for the solo 401k. You never use the EIN number for the business for Form 1099-R reporting. That EIN for the self-employed business, however, will be used when Form 5500 Easy applies. A Form 5500 Easy is an informational return that applies to solo 401k plans under two circumstances. The first one is once the fair market value of that solo 401k plan is over $250,000 as of the end of the plan year. So, for example, if the market value of your solo 401k plan was over $250,000 as of December 31st of 2025, then a Form 5500 Easy needs to be issued to the government by July 31st of this year, 2026. You have to take into account all of your funds and all the investments in your plan. You have to add all those together. So if both spouses are participating in the same solo 401k plan, again, it's one plan, so you have to aggregate both participants' funds, so both spouses' funds, to determine if the market value of $250,000 or greater has been met, requiring a Form 5500 Easy. The second instance when a Form 5500 Easy applies is when you close the solo 401k plan. Let's say you're no longer self-employed, in which case you're going to have to close the solo 401k plan. A Form 5500 Easy also has to be filed at that time, regardless if the value of the plan was over or under $250,000. So those are the two instances. And here is my solo 401k financial. We'll timely file that Form 5500 Easy for clients who request it. If you go to the Forms tab of our website, you can access the forms for requesting Form 1099-R and Form 5500 Easy. We never have access to our client's funds, so it's your responsibility as the trustee of the plan to communicate with us and let us know on a timely basis when you need the Form 5500 Easy or the Form 1099-R preparation assistance. And that's all covered in our annual fee as long as you timely request those services. Okay, so let's talk about the key takeaways regarding, can a Schedule C do a solo 401k plan? And then we'll go ahead and take a look at some questions here. So the key takeaways are, number one, yes, Schedule C filers can open a solo 401k plan. Schedule C line 31 is the starting point for contributions. Contractors and sole proprietors qualify if no full-time W-2 employees work 1,000 hours or more in that business. Single-member LLCs taxed as sole proprietorships or multi-member LLCs taxed as sole proprietorships are also eligible. Also, a husband and wife business use one plan with separate participant accounts. So if you earn self-employment income reported on Schedule C and meet the employee rules, then a solo 401k is one of the most powerful retirement tools available, especially for contractors and small family-run businesses looking to maximize tax advantage savings. Okay, let's take a look at some questions here. So you've got a solo 401k, you've got some questions. Do I need to sign an in-plan Roth conversion election form every transfer, or can I provide a single summary at the end of the year? Great question. So you just need to submit one online form for your conversions. So if you go to the Forms tab, you would fill out just one form for all conversions processed during the year, because only one Form 1099-R applies in aggregate to report the conversions. So yes, just one form needs to be filled out, and you'll want to do that by the end of the year so that we collect the necessary information to issue that Form 1099-R. Good question. Let's see here. I'm contributing and converting to my solo 401k after tax for 2025, now in 2026. What documents do I need from you for 2025 filings? So keep in mind, and we actually did a webinar on this a couple days ago. So if you go ahead and subscribe to our YouTube channel if you haven't already, and you can actually access a webinar that we did on this specific topic here regarding when conversions are considered being processed for IRS reporting purposes. So even if you made a contribution in the current year for the prior year, and then you converted those funds in the current year, the conversion is going to be reported in the current year. So don't confuse the solo 401k contribution deadlines with the Roth solo 401k contribution lines, whether converting pre-tax solo 401k funds or voluntary after-tax solo 401k funds. Let me dig this up so I can share this with you. So I'm going to share this link with you here that also has a video link to that webinar that I actually did a couple days ago regarding the contribution rules versus the conversion rules. So if you convert solo 401k funds here in 2026, whether you're converting voluntary after-tax solo 401k funds or pre-tax solo 401k funds, that's going to be reported as a year 2026 conversion, which means that a Form 1099-R would not get issued till next February of 2027. But if you process the voluntary after-tax solo 401k conversion here in 2026, where you made stemming from a voluntary after-tax solo 401k contribution that you made in 2026 for 2025, that's fine, because when you convert voluntary after-tax solo 401k funds, regardless as to whether it got converted in 2025 or in 2026 or in the current year versus the prior year, it's not going to matter because it's not going to be taxable. There might be a small amount of gains. Just a small amount of gains will be taxable when you convert those to the Roth solo 401k or the Roth IRA. But the basis obviously will not be taxable because you did not get a tax deduction for that voluntary after-tax solo 401k contribution. As you may already know, the purpose of the voluntary after-tax solo 401k contribution as part of the mega backdoor Roth is to get more Roth solo 401k funds into your solo 401k indirectly. So on the other hand, if you converted pre-tax solo 401k funds here in 2026, then yes, that's going to be considered a conversion in 2026 as well, and that is going to be taxable in 2026, because conversions are always reportable in the year that the funds get converted, that is moved from the pre-tax solo 401k to the Roth solo 401k, or the voluntary after-tax solo 401k to the Roth solo 401k or the Roth IRA. And again, take a look at that link I just shared you where we cover this topic in great detail. Okay, thank you so much for the great questions. Also, as far as yes, so your follow-up question there, it looks like I was ahead of you. So yes, that if you convert pre-tax solo 401k funds in 2026, it's going to be a taxable conversion for tax year 2026, not 2025. Why? Because conversions are reported in the year that the funds are actually moved from the pre-tax solo 401k to the Roth solo 401k. Don't confuse the contribution deadline rules with the conversion deadline rules. If you want a conversion to be effective for the specific year, you need to make sure that you convert those funds by December 31st of that particular year. You can never do a retroactive conversion. Okay, if this information is helping you feel confident about your retirement future, we would appreciate it if you just take one moment to subscribe. It'll really help us to get the word out to other solopreneurs like yourself, and it'll help us to keep growing this community. Please also like us across the various social platforms. Please also visit our community website where we have over 32,000 members. You can post forum posts. You can also post guest blog posts. It's a really vibrant community. Okay, so let's see here if we have some more items to cover. Now, one last item to cover here for the question, can a Schedule C do a solo 401k plan? Is that it's not too late to open a solo 401k plan in the current year for the prior year so that you can make all contribution types where your business is taxed as a sole proprietorship, effectively a Schedule C business. And you have Secure Act 2.0 to thank for that, where now you can open a solo 401k in the current year for the prior year. So if your business is taxed as a sole proprietorship or you follow a Schedule C, and you've never opened a solo 401k plan and you think that you missed your opportunity to do so for the prior year, it's not too late. So for example, you can open a solo 401k plan here in 2026. And if you open it by April 15 of 2026 and your business is taxed as a sole proprietorship, you're going to be able to make all contribution types for tax year 2025, as long as you had enough earned income from your sole proprietorship business in 2025. Here in 2026, by April 15 of 2026, you'll be able to make employee contributions, employer contributions, and voluntary after-tax solo 401k contributions. Listen closely here, however. If you wait until after April 15 of 2026 to open the solo 401k plan for the first time, then you can open it by October 15 of 2026 so that you can make some contributions. You'll be able to make employer contributions and voluntary after-tax solo 401k contributions for the prior year, so for 2025, here in 2026. However, you will not be eligible to make employee contributions, as to make employee contributions, you're going to have to open that solo 401k plan by April 15 of 2026 so that you can make tax year 2025 employee contributions as well. So that's the last thing I wanted to cover there. Okay, so that's it for today's solo 401k session. Thank you so much for investing your time with us. Your time is valuable and your retirement future is worth it. If you haven't yet, please like and subscribe, as I mentioned earlier, so that we can keep building this great community. Again, we'll be back here again in a few hours with more crucial content. Until then, have a good rest of the day.